Tuesday, October 25th. We're looking at the NASDAQ here, and then in the corner, I've got ES with a couple extra signals on this chart that are working better for ES than NQ. Let's just do a quick recap of the day so far. It's like 2 hours after lunch, so 2 o'clock, just coming up to the 2 o'clock hour Eastern. And currently on NQ, what we saw was after Monday's attempt, so here you really have to get the context right. You really need to see the bigger picture first, and then this will make more sense. So um, very quickly here, we are coming into an area that we traded through or into earlier 2 weeks ago, right? And we made this this like relative high. It was a higher high, but on the higher time frame, it was a lower high, right? So that area becomes important because longs who bought here ended up getting trapped, and then the low down here, right, a higher low. So these shorts got trapped. What does that mean? Generally, it means it's going to head back up there, back where the longs were trapped, to see if the shorts are still in control here or not. Now, the tricky part is that the market never goes in a straight line, and so the challenge was this turned into being somewhat of like a bull flag, if you will, and then we got a breakout, a retest that couldn't close below the previous resistance, making it new support, and that's that purple here. Then overnight, we actually traded higher, and I think a lot of people yesterday got. I was included in this. On Friday, here, I thought this was probably going to retrace at least a little bit. I was correct, but unfortunately, most of the retrace occurred overnight. So it was hard to take advantage of it unless you were trading futures. And so the only way to take advantage of this short really was to shorten futures and then cover either here, or else you'd have to hold this gnarly retrace and then try to get out here. Now, what I ended up doing is I shorted the close of Friday with puts, so I couldn't do anything here. And then exited once I saw this hold. I was out by then. In fact, it might have been slightly before that. I think I actually covered on this one because it looked like we weren't going to reach it. Now that I think about it, yeah, that's the open, right? So when we came back in, and unfortunately, all for the puts, because there was time decay slightly. I made like $14 on that trade. So it's like I took a lot of risk and didn't really get paid very much for it. But I knew it was a risky trade, and the reason I took it partially was to gain some information. I know that's kind of might seem weird for if people don't understand that, but I needed to know not only what the market was going to do, but what I was going to do with that risk on. Well, really, it's for a risk off trade, but for put to be back short, because remember the trend is bearish. So for me, I'm generally looking for retraces to short, or I have been when it comes to my swing trading, and this looked like a retrace that could be shorted that was rejecting out of this area. So I took it. Hey, Roman. I took it, but oh, sorry, is it here? This one here. So yeah, I took this one, but it didn't really pay me much, and that's an important realization because it tells us when it came to yesterday, like I'm not the only one who was in that position, right? Who shorted this, thinking we're gonna stay in this range here, shorted it, only to find that we couldn't stay in that range. So what does that mean? Well, it means that a lot of people are stuck short. That's what it means. Because they expected this range to hold. It didn't. It broke back out up into that Sunday open squeeze, which happened right here. Overnight we negotiated that area, and bulls clearly won that negotiation. Whoops, I think I missed a long here. they clearly won this negotiation. We can show it. I'll show it to you on the algo when we close. But this was not hard to sniff out with the algo at all. Simon in the room had identified overnight that we should be long. It was telegraphed quite clearly on the algo, so that was pretty neat. Holding through this was hard because there was data. There's economic data that came out at 10 o'clock. Was it 10? I forget what time exactly. It doesn't really matter. But after the open, I think it was 10 o'clock. There was more economic. There was economic news, and then there was also a bond auction later on. So or was it treasuries? Whatever, right? Like it's I think it was short term, like 2 year or something like that. But regardless, there were basically just two things that could push the market in either direction, and I generally with futures I don't want to be long or short. I don't want to be in a position when that economic information is released, because it's very likely that you're going to get your stop swept, only to see the move often work, and that's going to lead to me getting tilted. So I knew going into the day that A, there was a strong likelihood that we were going to go higher. B, there was also a strong likelihood that I wasn't going to be long when it went higher, right? I knew that if we just ripped like this, I knew I was prepared in advance this morning by my coach that we should not be worried about missing this, because if it does this, it's not our trade. This is the trade for those who were long yesterday overnight. This is a higher time frame trade to catch this. We might catch pieces of it, but to be the risk that we would have to take to be long and stay long would mean you'd have to get involved pre-market or before the econ comes out and hold, being willing to give back all your gains. So it doesn't mean you can't do it with futures if your entry was good enough, like early enough, aggressive enough back here, but you'd have to be willing to give up your gains. And I wouldn't have been. I would not have been willing to give up my gains with futures. Had I had calls, I would have held them. I didn't, so I was flat. I got up because, like I said, when I got out of that short yesterday, I had to go to my regular job, but I was decidingly no longer at all bearish, and probably could have gone with calls, but the fact that I got so close to getting stung pretty bad made me decide that I should just hold off and reanalyze it when I had more time. But by then the market had closed, and it was clear to me as well overnight that like the direction that we were headed is definitely higher for the time being. And there's lots of reasons for that we'll go over more later. I want to transition to the algo because what you're going to see is after a trend day, what generally happens is you get some sort of consolidation where we're going to bounce back and forth between like some sort of relative high and low, and then often continuation. It's extremely unlikely in trend days to give back that initial impulse move. It does happen, but usually not on the same day, right? That's where we get confused often. If you see trend days and you short them constantly, what you need to do, really, in my opinion, what I had to do, because I did that too, is you have to go back and review other trend days that looked like this and see how often within that same session, how often did they actually give you that fantasy short where you could get short, hold it, and take back the whole impulse move in one shot. It's really rare. If they do it, give back the whole impulse move, it's usually not the first one. There's a pullback, there's another high, there's a pullback, there's another high, and then it maybe traps some longs above that high and then rolls over, right? It's not the first, it's usually not even the second. So once I identify that there's an impulse move, it means there's momentum in the market in one direction, suggesting that the other side, in this case the bears, are in a lot of pain. They are trying to get out of their positions frantically. So anytime we do get a pullback, those bears that are losing money, those shorts that are trying to exit but haven't managed risk appropriately, they're going to act as new support. keeping the market floating. It doesn't necessarily mean that we're going to keep hitting new highs, though, and that's where it gets tricky. Is you need, well, I mean, there's a lot of the markets are just hard, but one challenging aspect is even if you know that shorts are trapped here, determining not only that you can buy still on the buy signals like the green bars, and then you shouldn't be selling the orange bars unless you get really really good location, like a big extension up that turns around with an orange bar. Maybe you could get shorted, but it's usually not a good idea. You can see that once we start to balance, the orange bars start to work again, but they don't extend lower. Whereas the green ones, you could literally just put your stop underneath the green candle and just hold it because there's momentum in the market, right? Whereas if you did that on an orange bar, even on the ones that worked, what ends up happening is eventually you get your stop taken out only to come back into and make it profitable again, right? So that's what momentum markets look like when they consolidate and rest. So this is just it's a period of rest, and the challenge, one challenge is figuring out how long it's going to last and whether or not your buys that you're signaled to take, whether or not they're going to produce a new high over the previous relative high, or are they going to press all the way up to the high of the day, right? That's where it gets really hard, in my opinion. It's not, for me currently, it's not so tricky to not just like repeatedly short at every opportunity just because we're not like driving higher. But what I know that I should be getting long. I think the hard part for me has been, can I hold that long confidently enough, even though the position compared to the higher time frame, like the daily chart, even though that it might not look like a place that I'd want to get long if I was swing trading. And again, I spent almost 7 years ago, like swing trading only, not really doing a lot of day trading, primarily swing trading, and doing okay. Of course, that market was a lot easier than this was. If you're swing trading now, it's pretty challenging compared to back in like 2017. But yeah, the whole 2017 to 2019, let's say, that whole area was honestly pretty simple for trend traders. It was yeah, and so even though you might have done well, it doesn't necessarily mean you had a great process. You just had to not fuck it up. So but what, back then, you don't it was really uncomfortable a lot of the times to buy as the market is rising or as the market is consolidating after a big impulse move. It felt really uncomfortable, but it worked over and over and over and over again. Like any dip you could just buy, even though it didn't actually take out a previous support or whatever. It could go higher, 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 settle down for a bit, make a slightly new low in the consolidation zone, and then just rip. And that was over and over and over again, with very few exceptions. Obviously, it didn't literally work every time, but almost every time. So because of that, when I see things like this, where we get under a relative low and get a sign of aggression, my natural instinct is to buy. But what's harder for me is taking this entry. And I realize that the difference in price is not significant. It's between 30 and 40. It's a 10-point difference. It's not that much, right? But psychologically, buying what we call trap trade behind this previous low. Here, I'll back it up a little bit. So when I see this, buying this one is psychologically a lot easier for me because it makes sense. It's like, okay, we're bullish, we pulled back, we got underneath this low, and if it was bearish, we would come up and roll over, and instead it came right back in. So I'll buy anywhere in here, and I'm comfortable with that position. Whereas if I'm buying here instead, if I'm buying here, it feels like I mean, it's not chasing, right? it's really not bad. It's actually like the confirmation pullback. So it's not a bad entry, but at the time when it's occurring, you have this foreboding feeling, if you've traded momentum before, that this low is going to get taken, and that right after that, after going down, it's going to come right back up and rip your face off, right? At least for me, that's been like the ghost that I've had to deal with, and it's a deep seated expectation that I have because I've looked at charts for so long and traded momentum for so long, that buying, even though this looks like a head and shoulders, there's all sorts of good reasons to buy this. It's a good entry, but I didn't take it because I had taken this entry and took profits, and so this entry was therefore chasing, right? Even though it's not. But I was willing to buy at 30, I was willing to buy at 33. When it comes up to 43, suddenly I freeze and think, I should have held this. Rather than they're giving you another chance to get in. So it's all psychological, but it's one of the reasons why holding runners in markets like this is so important, but yet hard. Because if you take profits, if you bought this one and you take profits at 10 points, and then you take profits at 20 points, and then you take profits at 40 points, and you have one more contract, what I tend to do, and it's wrong, is I see this as like, oh, what if we've topped? I don't want to give back, so I'll just exit the runners, and then because I don't want to have to leave my stop back here. Well, moving your stop to break even is definitely not a good idea. That's going to get hit often. But if you're willing on that runner to leave your stop down there and it's now bullish again, the chances that this extends significantly higher than 10 points when it does work is actually really high. And I don't want you to believe me. I want you to look at it, right? Like, go back and back test it, at least manually. Like, go back and find situations where you have a trend day with a lot of a big impulsive move, and then a relatively mild pullback that puts in a lower low followed by a higher low, and you get volume to shift higher, which is this yellow line. So as long as you're developing volume up here, right, which we are now, once that happens, the likelihood that the high is going to get taken out becomes really high. It doesn't mean it's going to this time, right? Like, no one knows if it's going to go higher or lower. But what we do have is probabilities based on past experience, and the probabilities say that this pattern of trend day up, relatively mild but swift pullback, and then a higher low generally results in the high, not right away first necessarily, but generally results in the high getting taken out. So then the question is, first of all, like, do you have the data to trust that, like, where your brain can actually accept that even though I know sometimes it's just going to drop, like, they're going to rug pull it sometimes, right? But usually by the end of the day, we're going to close higher than this, or at least test higher than this. If you trust that, then what you can do is just stop shorting and accept that even though this short worked and this short worked and this star short worked, like, all of those shorts worked, but if we believe that if we have trend day up plus higher low after consolidation, if we believe that the likelihood is that the high gets taken out, well, then just skip those shorts, in my opinion, and focus on nailing the long in a position where you can manage risk. Because knowing that it's probably going higher is not good enough for me to just buy it. A lot of people want to just decide I'm bullish or bearish and just make a decision right then and there about what they're going to do, rather than like actually identifying the location that they can manage risk, which is really, it matters more than almost anything, because you can be right about the direction, but if you can't manage your risk, what you end up doing is you get into the trade in the right direction but at the wrong time or at the wrong price, and then you get put in a position where you have to make a difficult decision, or maybe you get stopped out, or you lose too much when you're wrong. It all of the bad stuff that people associate with like trading losses, it occurs when you didn't when you made a decision simply on direction, and you didn't have enough evidence to execute that trade. Well, you didn't have enough evidence that you could manage risk, despite knowing. So, like here, I knew right here that we were probably going higher. That was managing risk. There is not hard. And what I should have done is entered anywhere in here. After that green bar printed, I should have entered anywhere in here, right? Which is this bar here, any of those. And then my stop can go just a couple, whoops, ticks below the low. So if this is the low, I'd maybe go down to like 28, 25, 28.50 is like, that becomes the stop. And so the entry is at like, let's say just make the math easy. Let's say I plotted on this little pullback just slightly at 38.50. So I'm risking 10 points. And so therefore I want to take my first profit. It would be at 38. I'm sorry, no, at 48. So first profit comes out here. Second profit could be any push above this. So anything up here would be fine once you do it. The moment I would see some lack of order flow, a lack of buying order flow, I would take profit. And then the rest would be runners that you'd leave the stop down here, anticipating that there's a relatively high probability that this high should get taken eventually. What we don't know is whether or not the pullbacks will continue to make higher lows, if they will come all the way back to your entry. You don't know, right? So that's the easy way to do it, but you have to have that vision of recognizing that I already know that it's probably going higher, but I need to manage risk, and therefore this is not a chase, because I can, yes, sometimes it will fail and roll over and you'll get your stop taken out, right? But it probably gets to this low then too. So putting your stop here makes a ton of sense, because when you're wrong, the market goes a lot lower. When you're right, it doesn't even touch it. There's, once you're in, you just set your stop and leave it alone. And then just do your best to have a plan for how to manage your profits, and try to be, at least for me, the challenge for me is to try to be a little more, I don't want to call it faith, but it's like trust, I guess. Like trust that the probabilities are on your side. And even though we don't know what's going to happen this time, that the only way you're going to take advantage of those high probability, the times it does run again, you will miss it every single time if you can't find a way to manage risk and re-enter on the pullback. You will always miss it. Or if you enter but you exit before you break that high, you will always miss out on those 10-to-1 risk reward plays. Like literally every time. If you take the trade, because this is what I do, and I know this, I take the trade, I took it here, and then get the profits, but release the runners because I don't want to give back a chunk of my profits, I will then miss out on every single time that it goes back to the higher. And I know that the probabilities are high that that's actually going to happen. Like, it looks like an unlikely scenario, but it's actually the most likely result. And so by saving myself the fear about this 30-point pullback, like not having to manage the fear of this 30-point pullback, results in me missing out on at least another 50 to 60 points a ton of the time, right? And the hard thing to fix about that for me has been that I'm rewarded for the decision, because when I instinctively release the runners here, what I get is a sign, an order flow signal that there's someone trying to get short, and then a move lower. And so the immediate dopamine release of, yes, I was right, it was turning around, it it reinforces that pattern, and it makes you believe the next time you have that opportunity to release those runners, it makes you believe that you've been right before. Because your brain is really good at remembering, most likely, most people, I mean, everyone's brain is different, but most people's brains are really good at remembering the condition, the decisions that were made that immediately result in punishment, or punishment, pain, or pleasure. So if pain and pleasure primarily, but also just punishment, like if you end up like psychologically like getting frustrated by your decisions very quickly after making them, those decisions are much easier to reprogram than the ones where you get in, you're immediately given the pleasure reaction because you look right, only later to see that it continues higher. So you get immediate pleasure, no pain for what turns out to be a wrong decision, and then only later do you punish yourself for that decision that you could no longer go back and fix today. Right? So you get two aspects of this that make it hard to remember. Hard to fix. Number one, the pleasure comes right after the decision. That sense of being right and getting it right is immediate. So it's like a hit of dopamine right away. And then the punishment psychologically is delayed significantly all the way to here. Right? So it's like almost an hour later you identify that had I held those runners, that they're now profitable beyond where you exited, and only now do you psychologically start recognizing that you've once again missed out on this move, right? And that punishment, unfortunately, that psychological punishment will actually reinforce the decision here. And I know it's confusing, but let me explain. The reason it does this is because your brain is not always logical, it's emotion. It reacts to those chemical changes that occur from emotion. What your brain doesn't want to have to deal with is the fear that this will happen, the punishment of the pain of that you create, that we create, that I create on myself for getting out of my runners. The brain will do anything it can to avoid that punishment. And so you'd think that the result would be you'd hold the runners because there'd be less punishment when it works out. There'd be pleasure when it works out, right? No. What the brain ends up fixing, the way that my brain ends up fixing it, is it says this long was risky. Right? So rather than the correct correction, which is accept this pain momentarily because the likelihood is that you're rewarded later, instead it does it wrong and it experiences this punishment, and it says, rather than I'm going to manage this trade better next time, what my brain does is says, I don't want to be long down here. This is too dangerous. Because I don't want to risk that this might happen to me, and I don't want to learn to deal with this pain. So instead, just don't even trade it and miss the whole thing next time, which really is two decent trades potentially, right? And then and so that's the pattern that I'm trying to break, and the way to break it I believe. Haven't done it yet, but the plan will be I can't get into the trade unless I'm willing to hold the runners, right? And so the result will be, first of all, every time I get into the trade, I will be forced to deal with this. So I will mitigate that fear of the pain by forcing myself to either take the trade and live with the pain or avoid the trade entirely. But then what I hope is if I can choose to take the trade, because I know I'm supposed to, that the lack of disappointment and psychological punishment that I would inflict on myself up here will result, hopefully, in holding, in being rewarded for this hold. And I don't care how high it goes, but what I need to teach myself is that 1 hour of pain is worth whatever this impulse move gives me. And then, so once I can choose to take the trades and I can choose to hold the trades, I should start, the ability to continue to do that will get easier the more I get rewarded for that when that probable result occurs. It becomes easier the more you take the trade, as long as you do it right. But every time I get into this trade and do it wrong and don't hold the runners and miss out, the harder it is to do it right, and the less good, the less optimal that entry is, because sometimes it just does this, like right here, right? If you thought that this one was the one to get in, you'd just lose. And so the problem is, you for every time you try that it fails, you obviously you get a stop, right? You don't get the high probability retrace. Yet you took the trade, so you get punished for taking the trade, assuming you took it on process, but it just didn't work, right? Everything was set up right, it just didn't work. You're punished because it didn't work, and the pain of taking the stop prevents you from taking the trade in the future, because you think you have this renewed fear that, oh my gosh, I might actually lose money if I take this trade that is aggressive but has the potential to pay me off well, right? So yes, it's an aggressive entry. Either one of this one or this one are both aggressive entries. So the other side of this, I didn't finish the rule. So the rules are, like I said, if I take the trade here, the aggressive trade, I must hold the runners with a stop down here. Must hold the runners. If I choose to skip the aggressive trade, same thing with this one. If I take this one, highest stop I can have is here. Now technically, by the time I take my two exits, I could move if I got in where I did at the star, I could move my stop here, but I'm definitely not moving it to break even. That's as high as I can move the stop. It's underneath these trap sellers. So if I choose not to take the aggressive entries because I don't think I could hold it, then this entry becomes basically mandatory. Mandatory. Because you chose not to take the aggressive entry specifically because you weren't sure if the retrace was done, and you didn't think you could hold. I didn't think I could hold through the pullback. Then I shouldn't take the aggressive entry, right? But if I don't think I can hold through this, but not taking this one, once you've gotten another bar trapped, right? It's the same as this. This one's just got a speed bar in it. This one doesn't. Not taking this, like, I must not be trading because I think it's bullish and they set up correctly. So, I mean, I can miss it. Like in this case, I just wasn't looking at it. Like I was talking to you guys, not looking at the market. So that's why I didn't take it. I wasn't trading, right? For that moment, I had taken a break to explain what was going on, and I just missed the entry. But had I seen it and chose to skip it, that is a that is a problem. That's a psychological issue that would then need to be dealt with. And then you'd have to ask, and like I said, if I didn't want to take it, it would be because this was the better trade. And like I said, looking back at it, it is the type of entry that I have missed and skipped in the past because we have this low here. But like I said, that's something that I just have to make the decision. If this is too hard to take, then I have to take the aggressive entries, and I have to hold the aggressive entries. If this is too hard to hold, there's no excuse for missing this, other than I wasn't looking at the market. That's what it really comes down to, is if I know I'm bullish and I know I'm looking for a pullback to buy, I need to make a decision up front before this pullback is finished of what am I looking for, what am I willing, what do I think the probabilities are, that how confident am I in the direction? Let's put it that way. Am I extremely confident, slightly confident, not confident at all, right? Mildly confident? Like, do I have evidence from back testing and experience and like intuition or whatever you want to say, to think that the direction is already determined? And in this case, my confidence was high that we were going to at least break the high day. But I identified that if they didn't, or if they don't, they haven't yet, that the move here primarily, now they've already done it on ES. It was primarily on ES. The problem was, I said that this, I was saying that if they don't continue higher here, and instead they rejected it, having a high like this is really dirty. This is much better. And when I say dirty, I mean like they're trapping buyers like ferociously up there, because these voodoo range levels, like here, this is a perfect example. When you see this, you can pretty much guarantee that your next high is going to be a lower high and your next low is going to be a lower low. Doesn't mean the trend has changed. Oh, here's another one, right? Next low is probably going to be lower. Now, in this case, yeah, the high, I guess, is here. So high, lower, high, and then after this low, you're going to get a lower low. This one, you actually did get 3. Here's one on the other side. Tested beyond, failed to close beyond. Close all the way up here. Guess what happens? Next low, probably a higher low. Next high, probably a higher high. See that? Now, it doesn't mean it has to get higher than this one, because that's a big time frame. But this little time frame, yeah, you're going to break this most of the time. Any more like that? No. And then usually what you get is a retest of that level. So now look, on ES, it was not hard either. On ES, I can see it on the chart, so I know it wasn't hard on the algo. Look at that. Yeah. So on ES, what it did, aggressive entry, conservative entry. You have to be, when I say conservative, I mean, I realize it's higher, but you can be, like whether or not you're passive in your entry or aggressive will depend on where you are. So like you'd have to aggressively enter this. You don't want to just passively like suck up buys down here. You would aggressively buy this. And then the more passive way to do it, conservative isn't the right word, passive. The more passive way to do it is seeing this and then being willing to get long anywhere in here. So you're long usually, whoops, in this case, you can, shit, I can't grab this. Your long here is actually, well, on the green bar. The better long is this, because you can passively enter now. The trend has been confirmed. See that? Okay, so now look. Make sure I do this right. See that? Passively enter. And I realized that I didn't show you that before it happened, and so it's hard to accept that like is part of the plan, but it would have been an acceptable entry, and it makes this, which happened at the same time, a way better long because this on ES at the time was retesting. And you see this one was off of a voodoo range level as well, which is the dash line. Are those updated? They are. Makes sense. So once that happens, once you get the, and then, yeah, once they can't back into it, I mean, you could say that here too, and then you have to try it twice. But oftentimes, once they've done this, then they back up and they can't break that low. Especially when the 2-hour VPOC here tried to shift down and couldn't go any lower than this. Look at that level. This level is huge. Do you see the delta? Look at that. Like, holy shit, right? Like, that's an aggressive move higher at 38.50. Aggressive. Someone probably got super short down here. Yeah, look at this. 3,000 contracts down here. Someone sold. And now they're in with 2, 4, 5, 6. I mean, wow. That's more on the bid than on the ask. That's not just contracts. Obviously, 3,000 contracts would be a lot for one person, but 3,000 more traded on the bid versus on the offer. So they aggressively shorted it. Where was that? Right here. See that? So when they sold that, we get the star, and we know that area, they're trapped. So that's a buy, and that's a buy. What did they do here? They trapped them again. Guess what? That's a buy. That's a buy, right? A lot of times on ES, it's a lot more clear because it's just not as much. It's like it's cleaner. There's not as much wiggling, so it's a good place to start. The problem with ES, in my experience, was it didn't set up as often, so you could watch all day for this move, and if you miss it, like, you may not see it again. And that's kind of normal on a trend day, but like even on balance days, like you'll get maybe 2 shots at the really good trade. Whereas with with NQ, even if you miss an impulse move like this, you can confidently short that, and it'll still work. I wouldn't, and then same thing here. If you were bullish and you missed this, confidently, I guess you could have done this in ES too, but you can, I guess what I'm trying to say is that NQ is a little bit more forgiving if all you're looking for is 10 points, and you're okay getting more, obviously, but you just need to get 10 points. The likelihood that the turns, the rotations are big enough to get you paid in both directions is higher. If you're long only, which isn't a bad idea, honestly, because it's a lot easier to think about things in one direction. And if you're going to pick a direction, pick long, because it's just easier. The trades work more often. It's no doubt. I mean, sometimes they won't work, but if you had to trade one or the other, shorts work way worse during up markets than longs work during short markets. If that makes sense. So during bearish markets, your longs won't work that well, but you won't take nearly as many stops, at least with this process, as you would if you take shorts during an uptrend. Shorts during an uptrend, you can take all sorts of pain, especially in both products, but in particular with ES. But NQ too. The nice thing about NQ is you might get a chance to escape with some of your risk off, which helps. So, at least that's been our experience. So there's not a lot to do right here, because the decisions had to be made earlier. So this was a long, this was a long, this was a long. You could technically have shorted this, but why? Like, I guess. I mean, it's not a horrible trade. You put your stop here at 68. You put your entry at, let's say, like 53, and you get 20 plus points, right? yeah, now there's not a lot to do. So we're just going to wait. And we're, 15 minutes from the power hour, last hour of the day. ES did trade above its high already. So I'm watching carefully to see if NQ can break this. If they can't, we might have something to do. Actually, speaking of that, let me step away. I'm going to run to the restroom because if this is going to get interesting, it'll be interesting soon. So hold on real quick. I'll be right back. Okay, I'm back. Sorry about that. I had to take a quick phone call too. And then my cat was getting into stuff. So, like I said, I'm not going to short this. Yeah, not not really interesting to me at all. I'm not interested at all in shorting this. Not because it can't go lower, but just there's been so many times where it doesn't. But they might set up another long. Go, cat. You're so naughty. Urgh. He tries to climb my. I've got a big 55-inch screen for my one of my monitors, and like it comes out from the wall on one of those mounts. And he's decided that that mount. He's got a huge cat tree that he doesn't really climb, but the mount of this TV is the tree that he wants to climb. So he's constantly trying to get behind my TV, and then he'll climb up on the mount. And I mean, he's not. He doesn't weigh that much, but it's still like, dude, get the hell off the TV. What the hell are you doing? But I'm pretty sure it's specifically because I'm in here and not paying any attention to him, and he's only 2, so he's a sphinx, so like they sort of know how to get to you. They're sneaky like that. Yeah, he's a cool cat though. I'll let it slide. Oh, nothing to do. Sorry, guys. If you have questions, you can type it in the chat box. Try not to fall asleep here. Um, I definitely do not want to overtrade and give away my small green day as it is. So. Yeah, but see how slow it's gotten is also a really good reason why you want to avoid shorting. It it's just really hard to get the roll down without speed. And you can see on ES, like we're gonna negotiate this 3860 50 level most likely. We're gonna you know uh, balance on it, orbit it for a while. They're just trapping all of these shorts, and they're trying to add to their position. And they're like, nope, short, nope, right? So it's anybody who got short in this whole zone is just hurting so bad that you the likelihood that they get let out of that trap is really low. Now here, we can adjust this as long as we're just sitting here. Let's see. So the new orbit is here. So we're gonna flip this to here and then adjust this. Hold on. So the new orbit is 381950 currently. That could change again. Okay, so we're gonna oh, whoops, no, I'm wrong. The new orbit is 3799. And then, given that, that's the orbit. So now the fib, the other side of the fib can really anchor at any of these, whichever one lines up best, basically. That's not too bad. Like that one just doesn't give us a lot of, these are probably good anchors, but they don't give us a lot of levels down there. I'd have to extend it significantly. But we could try one of these. It shouldn't be this one, but this one makes sense. Yeah, that's a decent draw. And then this one makes sense. That's actually pretty good. The 50, the 100, the 100 of course, and then the 200 and 162.8, those you really want to see lining up, and all of those aren't lining up, so that it's not perfect, but you can see that in these middle ones, that is basically the zone. And so if we were going to start pulling back, I might use that to try to look at where we're going to pull back to. For instance, 38.48, that makes sense. If you think this high will hold, or if you want to know if it'll hold, you can do this. Oh, interesting, look at that. Perfect lineup, 38.50.50. So that, and then what did the other ones look like? Do we have a 50? Oh, we're way closer on the 50 on this one. And these still line up. You know what, we're going to use this draw. So the primary target, if you're bullish, is up here at like 3,900. Might not get there today. There's only an hour left. But that's how I would draw this. And then, of course, if it happens right away, you'd have to move this draw. But if we're going to start dipping here, and they actually get through 38.50.50, you'd expect 38.40 or 38.32.75. Like one of these levels is likely. It really shouldn't go much lower than 38.25. Because if it gets down to 38.24.75 and lower, what are you doing, Kat? All right. What did you eat? You ate something. I see that look in your face. What did you find? Like, oh, goodness. So yeah, what was I saying? If we can't hold, dude, stop. You better not puke all over the floor. I don't know if you ate like a dust bunny or what, but he must have found something on the floor and decided it looked good. Because now he's like hacking, but not throwing up. Oh, there he goes. Did you just throw up? Oh my gosh. Yep, cats are fun. So, yeah, turning around the other way, 38.50.50 is the primary spot to watch, and then 38.40 would be next. And it's really important that we hold 38.25. To get to 38.33 or whatever, 38.32.75, to get all the way down there could be problematic. Get out of here. Could be problematic for bulls just because this is so close to it. If you think about it, if you dipped down under that, you have to be really careful. You have to make sure that the close of like all the primary candles is above whatever this low is. This pullback low, 38.34, really does need to hold now. But I would not be shocked if they try to pull it back into the 38.40 area, because now we have broken this high. And that's what I said earlier was with a trend day up, usually you end the day at near or at the high of day, but almost always whatever the impulse high is, you trade over it, which has already happened. Now on NQ, We have not traded over the high, the impulse wave high. See that? We have not traded over it yet. We came like almost right up to it, but didn't quite reach it, and then turned around because ES got stuck. So there are like it's possible that ES made the high, and so NQ won't. That's possible. But again, this draw is also kind of old, so we could adjust this as well. We'll do it. I'll show you what I would do. But I mean, these levels are still working. But let's assume that this is our orbit is 1146, 11,468.50 is going to be our orbit, and then we're gonna where is it? Here we go. So we're gonna go unlock, and we're gonna take this. We'll use the impulse wave high to start. Yeah, that's usually the one that works. So on NQ, this one's obviously important, but really they need to close candles above 11.6, 15, 25. Otherwise, this consolidation zone might end up becoming resistance. And they could, come down, come back up, and fall out of it. It's interesting that these two candles both close under the, what is this, 55.25 level? Yeah, this one came over it. So this one, and this one will also, on the 30-minute, will also close above it. So really it's not bearish in any way. But if they tried to break this down, you could technically test 11,587, bounce, and as long as you get back through 11,630, you'd be good. So even if they want to extend this a bit and do like some expanding negotiation where it goes lower and then goes higher, makes a lot of sense. I think the least likely scenario is to come back and return to this area that's already really been negotiated, and the bulls clearly won that negotiation. But the close of yesterday was down there, and there are definitely levels that, like, if we could get underneath 11,430, we could see some fireworks. But think about it. What would need to happen to bring the market that far down? You'd have to get rid of the entire impulse move of the day, and you'd have to close the gap from overnight. It could happen with news, but it's not just going to happen in the last hour of the day for no reason. So if you feel bearish, you need to temper that for the time being, and you're going to need to decide, what do I have to see where I can be bearish again? And I think the primary things is you need to see speed. You would want to see some trapped buyers, which we really don't have, and then like aggressive buyers at the highs, and then you need to trade underneath that morning pullback, and close candles underneath it. So 11,587 I said for NQ, and ES 3832. Let's say 3833. It's technically 3832.75. It's got to be under that. So let's say 3832. So if we get closes, 30-minute closes down there, then we could maybe have some trapped buyers, and we could begin looking for pullback shorts. But to get down there, it's going to be pretty tricky. We'll see. NQ definitely looks like the weaker one, and if anything, ES may have trapped some buyers at the top. You can see they had high volume on this one. Well, a volume anomaly. Let me double check. They had a volume anomaly here, volume anomaly there. Let's just see. What does this look like? All right, so the party control is all the way at the top. We haven't finished this yet, but let's. Oh yeah, so there's not a ton of volume up there. What about from here? Right where we are. And off the low. So I'm just drawing some volume profiles to get some levels. So this one and this one. So for buyers to continue higher, the market needs to develop volume above those white lines, which happened, and then it needs to hold them or test them and bounce off of them with aggression, like a green line, a green bar, or a star. So if we can go just a little bit lower and then bounce with a star there, that might make sense. Otherwise, we could do the same basic thing here. Looks like this. And this. We have one here and one right at the voodoo range level, so I won't even put a mark there because I don't want to mess that up. And then we can erase them. And so the actual levels here, it did develop volume above. Then it came back in, gave us a green arrow, green bar. That one's already gone, right? Now, technically the next green bar, especially if it showed up down here, would still be good, or a star up that has a wick that gets into here. Now let me just check something. Where is that high volume area? Because if it's here, I'll show you. It may not be a concern. Oh, whoops, that's the wrong one. DVP, way to the low of the area. Yeah, it's pretty tight. It's a pretty tight area there. So that's where all the volume was during the wave down. So anybody who shorted down here is trapped. And therefore, we should get responses from buyers if we can get down there. We've already seen it once. It does not mean it's going to keep working. But if we want to know where the algo says buyers are waiting, it's there at 11,650. Now, more evidence of that would you can look if you want more evidence. You can look at the delta, and you can see a big delta player in that 11,650 area. So someone aggressively bought right over that important level. If you see, that's immediately above that high volume area. So, yeah, that's probably support. So could we technically buy way up here? You could, but it's a lot harder to hold runners up here because now let's say we bought that for some reason. Our stop goes here, and you're stopping out basically exactly where you want, well, not exactly, but in an area that you really want to be buying in. And so that's generally a sign that you're probably chasing, but it doesn't mean it's not going to work. It's just that you have to accept that if you take a trade that high, that you might have to try it more than once before you get it right. And in this case, the easy way for me to decide whether or not I'd even be willing to buy it up here is to look back and say, well, how low would I be willing to buy it? Well, I'd like to buy it back in here, right? So if this stopped out and then it triggered again, would I take it? Probably. If it then stopped out and triggered again right here, would I take it? I'd really want to. And then what if it stopped out again and it triggered back right here? Like, I'd be frustrated if I couldn't, right? So if that's the case, it's like those earlier ones are probably too aggressive, and you're better off waiting and seeing if you can get one of these to set up. Because it could just fall right through and then it just doesn't set me up at all, or it might not even go there. It might just run, right? And in both of those cases, I can just say, not my trade. So if they just run it here, then the long was here and here and here. And you either held the runners or you didn't. And I didn't. And there's just nothing else to do. I'm definitely noting how the stars to the downside were working until they trapped one. See that? They trapped him down here. And then they bounced off of them. Now the orange bars and stars are to the downside are not working anymore, right? So confirming once again that shorts are stuck. And if I was playing calls and not futures, I may not need to know much more than that. That might be enough to say I'm getting long on any dip, right? But with futures, with leverage, no. I can know that it's probably going higher. Like I said before, if I can't manage risk appropriately, I could literally blow up my account and be right. Like just as I blow up just like as I hit the max loss, it could just reverse. So And again, this dashed line on both of the charts, the dashed blue, the tight dash right here, that's the 2 hour VPOC. So if you think it's developing, right? So if you look at all of the orders over the last 2 hours, a running total of all the volume, that is the point where most of the volume in the last 2 hours has been traded. It's very normal. Okay, let me put it this way. If it's bullish, and we'll do this, I'll show you in the review, but if it's bullish, what you see is volume developing higher, price returning to where volume was earlier and bouncing. Maybe not immediately right on it, but in the general area. So, for instance, volume was here after a pullback, right? This 11,631, whatever that is, right above the voodoo range level. I thought it was supposed to. Oh, I see. It's highlighted up there. So that down there, 11, where see how long that VPOC was there during this whole negotiation. The 2 hour VPOC held out there, and then they slowly developed volume above, and the VPOC shifted, right? So this shift can bring about pullbacks, and those pullbacks, if it's bullish, will bounce around here because all of the people who shorted those lows become the new buyers that support that level. So I'll show you in the, I mean, yeah, there's really no way I can get a trade here, so I could technically show it to you now, but that happens all the time. If you're trading ES, so watch the dash line. See the dash line? Dash line here, price moves up, volume moves up. Guess where it's going? Back to a previous dash line. When will it bounce? When price comes back to that level. See that? It was also here for quite some time. Right here. Oops, didn't quite get it. Can't get it on there. There we go. Price tries to pull back to that level. Can't even reach it. Bounces. Guess what? Going higher. Okay, so it stayed here for a while, right? Went higher, came back in, tried to go lower. See the yellow line? It couldn't get volume on a tiny, on even this tiny 24 tick Renko, 8 tick Renko, to, it couldn't get volume below that level. See that yellow? Immediately when it hits it, price responds by buying. It's bullish. That's not bearish behavior. So now we've developed volume and price high. We developed volume and price higher. They pull back. They got a volume shift up. If you were bearish, that's where you short, right? But look what they do. Volume shifts up. Price goes up. Super bullish. Now, will price continue higher forever? No. Eventually, it's going to slow down, pull back into one of these levels, like maybe here, or here, or here, one of these earlier levels, and then it'll come up and get stuck without going over one of the earlier VPOCs. So if price did, so yeah, let me get rid of all these lines. I'll redo it. Okay, so again, we've got all, if you watch this dash line, wherever it spends time for quite some time, or returns over and over and over and over again, those are obviously important spots. So let's mark that important spot. That's 38, 48, 50. Look what happens above it. Tons of buy aggression. So if the market, again, I don't think this is going to happen, but for it to be bearish, what would need to happen is it would need to come down, reject this, right? Not bounce here somehow, or bounce but get stuck there. Then return to another area of where volume was agreed to be bullish, more buyers than sellers, like down there, let's say. I can do the overnight high, that's where we'd go. So if you're bearish, that's what you're expecting, right? The problem is that to do that, think about what it has to get through to do that. It's got to get through all the people who shorted through this in the open. It's got to get through all the people who shorted this pullback, all the people who shorted this pullback, and everybody who was trying to guess where the top was going to be. Like all the people who shorted this. Oops, sorry guys. So now NQ is probably going to spike that high. And like I said, I'm not going to buy the breakout. I'm not going to short the breakout. I'm going to do nothing. this. I realize it looks like I don't trade very much when the market does this, but the buys were back here. We already talked about how to make that adjustment for me in a trend day to make it so I can still be long here. Could you just buy a pullback? With calls, sure, where you can adjust you can get some out of the money calls, risk an amount that you can lose, and make sure that the premium is less than that, right? If I wanted to trade, if I was willing to risk $200, well, then I'd find an in the money out of the money call that costs less than $200, and I'd buy it, right? And then if it broke higher, I would sell it, and if it didn't, I'd lose $200 or whatever the premium was, right? That would work. All you need to do is know that you're bullish. With futures, I would just, I could technically buy, I could do the same thing with like 1 micro, but then I could, in the meantime, I wouldn't be able to, I only have, in that account, I'd be stuck basically in that position, and I wouldn't be able to trade my way around the pullbacks and stuff. So I'm not going to do that in this account. Not to mention that the reward for doing it wouldn't be that great, unlike with calls in that situation. And if I wanted to do it with a bunch of micros, what I would probably end up doing is taking profits along the way and cost myself quite a bit in commissions. So I'm not saying you can't do it. Like, it can be done. It's just it's just easier when you can control your risk with a less leveraged product. Like one of those 3x ETFs. Like if you wanted to buy TQQQ calls, or I'm sorry, not calls, TQQQ shares, because you know it's trending up and you're confident the market's probably going to head higher throughout the day. That makes sense. But you're gonna have to accept that the times that you're wrong, you have to get out immediately, and managing that risk is going to be tricky if you don't time your entry correctly. So you'd have to risk an amount that you were willing to lose if it came back down here, right? For me to do that with futures, to say like I want to put a stop at 11,630 and buy 11,670, that would suck really bad, right? And what's the likelihood that I actually get 30 more points on top of this? Like, it's pretty good, but am I willing to give back like 30 to 40 even MNQ points for the chance to make 30 or 40 MNQ points? Not really. Not when I can just wait for the high odds setup that I know is going to work 60 to 70% of the time to get me at least 10 and to just take it with NQ instead of MNQ. Like, why go with the 30% play, even if it pays me 30 or 40 points, when I can just take a bigger size with the 70% win rate trade? Of course, the problem is that you end up doing a whole lot of waiting, and you have to be really patient, and you have to accept that on some days you're just not going to get your trade, or you're going to enter it perfectly and just kind of goof the exit. That, you know, that's the problem, is that you have to accept that you're not going to be able to be in the market all the time if you're going to be patient and selective. Then you're, by definition, not going to be in the market all the time. And like I said, I'm cool with that, but I know a lot of people aren't. Sorry guys, just nothing really to say. If you guys have any questions or whatever, ask. We're just kind of watching and waiting. It's for the end of the day, it's really slow. You'd expect something interesting to happen at the end of the day, and they're just not doing anything with it. So I was hoping maybe we'd get some fireworks, but there just really has not been any interest. And now, if you wanted to short, which I don't, but if you wanted to short, that is technically a valid short. But just watch what happens here. Let's see what happens. Do the bears take advantage of that? It's a valid short because we got a power bar, what we call an apex over here, right? A pivot, and then we traded above that apex slightly, and then closed lower. If it's bearish or balanced, that's going to result in at least a 10 to 15 point drop. The arrow here indicates that somewhere in this bar, there was someone selling that didn't get their order filled. Or maybe they were adding to their order as it was being filled. So it's a order flow signal that you can interpret as a momentum shift or an attempted momentum shift. What we generally do with that will depend on what the next bar does. If the next bar closes bearish, which will happen at 11,683.50 if we reach that price before 11,701.75. If that happens, then we could put a line at 11,683.75, one tick beyond that or so, and say as long as bears hold the price down there, they have the momentum in their favor. But once bulls retake that level and they develop volume above it, which in my opinion is how you retake a level, is you don't just put price up there, but you get buyers to commit aggressively up there and like develop time and volume over that level, then you wouldn't want to be bearish anymore. If on the other hand it closes up here at 11,701, then you can say that this high is the kind of spot where breakouts are gonna this then becomes the important level for bulls to break beyond and hold above. And if you get the bullish close here and then they test but fail, pullbacks to the upside can be shorted if you think it might be bearish. But I really don't think it's bearish. So here, I'll show you right here. Arrow. We got the very next bar was in the other direction. We put the line here, and now that level is important for bears to take back. Guess what happens when they don't? You can technically long. Is it a high odds winning long? Is there a high probability that you get an extension here? Not high probability. It's above 50%, yes. It's not 70%. It's way better when you're going in the direction of the trend. So for instance, here you had the blue is a bullish, but the next bar was bearish. And so now technically you could say bulls need to hold this level down here, which is basically the Voodoo range level. And if bears can get under it, it'll be bearish. Well, what happens? Buyers support the level. That guy who didn't get filled here is not done buying. It goes higher. Whereas this is exactly the opposite. Big seller doesn't get filled. Buyers quickly push right through them. He or she definitely got filled. And so when they return to it, since this person was a seller there, they're going to be a buyer when they get a chance to return to their buy or their sell price. Sorry, so they sold here. They were adding to their orders. That's what the arrow says. Yet price goes through that level when price returns to it. Very, very normal for that level now to become support, making this or this a more aggressive entry as long as you trust that the trend is intact. But like I said, in the opposite direction, when we have counter trend arrows, so in this case an arrow to the downside in an uptrend, and then you get this break over it, well, now you can think about it like bulls remain in control as long as they don't develop volume below here. That's the only real way that sellers could take this market, is if they can develop below here. So do you want to be a buyer at 11,702.25? I mean, you certainly don't want to be a seller if they can't get under it. But it's technically not immediately a buy for me. If they go higher significantly and then come back and test it and they can't get under it, kind of like they did here, that's an okay buy position. The problem with this setup is that your stop is a lot lower than you think. It's actually got to be down here. You can't put your stop at 73. You want to buy in that general area. So it is a 2-bar stop. Now this one didn't go much further than this low. And if this stop gets hit, you're probably done. But if you can, what I will do is take it with smaller size so that I can give it a little bit more space than usual to breathe, because the trends, they like to test these, they like to see how strong buyers actually are in that zone. So it's very normal to get this area filled in a bit. If the trend is strong enough, it won't, as you can see. But it's, yeah. It's my own order flow signal. It's got no equivalent on the TNP one. It's my own signal. It shows up a hell of a lot more on ES. You can do it on ES quick. So on ES, it was blue. Oh, and then this is the other way it can work. So when the next bar goes in the same direction, now the level to buy is actually this. So I don't buy the breakout, but if we come back into there, that's an okay scalp. And as long as we come back and test that and we can't get below it, you can actually dip by there, which is uncomfortable, but technically okay. And you can see why. Now on the bearish side, it would be here, right? And so see how they try to get below it? The purple bar is a sign of weakness to the downside. They come back up, and when they try to put some aggression underneath it, they get ripped up, right? So you have to be you really do need to know what the direction is. You can't just short the breakdowns or whatever. Like it's not a reversal signal at all. It's a momentum signal. And momentum trading only works if you trade it with the trend. It's not a reversal signal. We are coming up on the voodoo range level, 17 or 11, 7, 11, 50 on NQ. ES like blew right through the voodoo range level and retested it on this bar, only to bounce higher. That's pretty bullish. So I'm definitely not interested in shorting this. I'm a little disappointed that I didn't react fast enough this morning and get calls, but that I could hold. But yeah, it's, I mean, you really can't blame yourself for the trades you didn't take, right? You can try to fix your system to take those trades more, but if you didn't take a trade, you got to assume that you got a reason for it. Whether or not it works out or not is not somewhere you want to spend a lot of time when it comes to improving your trading. You might want to work on why you didn't take it, but thinking about where it would be or how it would have done, like if I was still in the trade that I didn't take, right? Like that's a waste of resources in my opinion. And you'll potentially set yourself up for bad habits. So see how they shifted volume up, this dashed line, and then they put it here. They tried to get under it, but they can't do it. See how the yellow line can't get under the blue? Clearly bullish. They're trying so hard to push it down, and buyers are just like sucking it up, getting totally absorbed below the 2-hour developing VPOC. Super bullish. Do not be short. Like I said, I have a hard time buying these bars personally because we're at the high day. I'm not good at it. You have to be really aggressive on your exit. And you have to accept that you're going to look like a dumbass buying the high day when it's like the very high of day. And it's like you just you're the last one to get in. But I will say, if I've been doing it successfully, like if I get it over here and I get it over here, I'll keep doing it until I'm wrong, because giving back one stop at that point is not that big of a deal. You've already built sort of a cushion. What I usually won't do is, if I've just watched it, I won't wait for it to like do it 3 times and then take the 4th. Because that psychologically is a lot harder to deal with if that's wrong. If you skipped them, bought it, and then it's just like, right? Like, oh. You just feel like you're now gonna fuck up the rest of the day. I guess if it's the end of the day, maybe it doesn't matter. But if the concern is that you might tilt, at least for me, buying every new high we make, the likelihood that I'm gonna feel like a dumbass buying it gets higher. And like I said, and unfortunately, that because we all have egos, at least somewhat of an ego, the chance that that's gonna turn into tilt and cost you more than one stop is probably higher. I mean, it depends on you, but for me, it's not at the very highest things of that tends to cause me to tilt, but it's up there. Top five at least. Whenever you see this pink background on my charts, assume we're bullish unless we can break down underneath them. So like here, bullish as long as we can't break down below that. Here, bullish. Now notice we can get trades under it. It's okay for price to go down there. You just don't want to see this. Like trades going off underneath it are buy opportunities. Those buy opportunities sometimes fail. And when they do, it's bearish. No one is right all the time. But you have to know somehow, objectively, visually, whatever, when you are wrong. And that's primarily how I use those backgrounds. Those, and then they're purple on the way down. So here I knew, whoops, once we could get above this, chances are, because it's the lowest of the two, chances are it's not bearish anymore. And then the highest one was here. So once we got above this, with volume like that, I knew we were going higher. It was just a matter of getting the entry, which was here. But this one was hard to take because we hadn't gotten above it. So it was technically still bearish on this tiny little time frame. But like I said, I was able to take that trade because I was confident the higher time frame was bullish. And then I sold my runners for a profit, but for a small profit. And so it's just, you know, and that's frustrating because the only reason I bought it is because I thought there was a good chance this was going to happen. Yet I'm not in the trade when it happened. So that needs to get fixed. Because I already know how to not blow myself up on trend days. That was literally costing me money last year. I would do really good in balance and then blow up practically on trend days. So I've solved that problem, but actually taking advantage of the trend day when the impulse move itself occurs either right before the market open or right before an economic release that I know I can't trade, I accept that the risk in that trade is too high for me. It's not my trade. That's okay. But to be able to survive when that happens is a great feeling. I'd like to be able to thrive there, though. Even though I know it's a hard day to make a lot of money for me and with this system, because I'm not gambling. I'm not trying to guess whether or not housing starts are going to be lower or whatever. Like, no. I'm not. I will just be out of the market whenever any of those kind of things come up because I know it's a market moving decision and I'm not some economic expert. So I'm not going to look at that. I don't have an algo that like reads the release or something and makes decisions based on past performance. Like, no, that's not my game. That's not my edge. So I let those people make money and I don't let them take it from me. The traders who do that stuff good or well, they make money when that happens. It's gonna be your money if you're in the trade during those releases or during the open. So yeah. Like if you want to stop losing money, then just stop trading against them. So this is technically a short signal. You can see that we've gotten a test underneath the pink bar that's way at the top. This is probably the first short that I'm tempted to take because I think it'll probably work. I would like to get it cheap. In other words, I'd like to get it on a retrace like this. And I really don't want to give away my green day. So we're bouncing off the Buddha range level. I'm not going to touch it. See that? It bounced right off that dash line. It doesn't mean it's not going to work, but if it does come all the way back up here, I'm going to assume it continues higher when it does that. It literally backed right into it. If you see that? Backed right into the Buddha range level and found a buyer. Meaning those algos that play mean reversion are stuck. Like they're dying shorting this over and over again, and they have no choice but to layer on bids um, right at the level. Like that short. Like I said, I'd be surprised if that short worked when that guy is sitting there right at that level. It could be coincidence, right? It could be some human trader that has no idea what they're doing and it's not the algo, but I know the mean reversion algo that's on all the time. I don't know who runs it. I don't care. But it's literally on all the time and it reacts to these levels. Um, I know he's a buyer and I do not want to trade against them. They make money way too often. So when I see this, especially in a trend day, I'm like, okay, I guess they think it's going higher, and their algo is way more sophisticated than mine. So I'm just not going to fight it. It doesn't give me a reason to buy it personally. I need an actual signal, not just a sign that they're in the market, because they may just be buying because they're hurting really bad because their system might not work very well during trend days. I don't know why they're buying, right? So I'm not just going to follow them. But I do know from experience from watching it that when they get in trades, they usually win. And I know what it looks like when they get in trades, and this is what it looks like. It backs into the Hooter range level and they bounce. Now, like I said, I don't know if they're exiting their short that's getting totally destroyed or if they're just really good at buying pullbacks. I don't know. But for some reason, they're good enough at it that day after day after day after day, the market continues to bounce off these levels like a fucking trampoline. So I don't know why that is. But it'll keep happening till it doesn't. And it's like it's not just today. Like it can, like any look at, right? Like why does this work? Now, does it always give you 50 points? No. But this one too worked. Right now, momentum isn't big enough to push these anywhere. But you can see they couldn't set it up down here. See that? They just ripped right through it. Tried to bounce. Traded down here. Can't close below it. Now they're backing into it again. Guess what? They did it here. It bounced. They did it here. It's probably going to 11,792.50. It's probably trying to get up here. I don't know if it will, but that algo that like trades that constantly, it thinks it is. Like either that or it's covering because it's scared it will. Like it. I mean, an algo can't be scared, but it's like it may be de-risking because the probabilities of it hitting 11,792.50 are high. Now they did not close the candle up there, so maybe we do see it flip here. I don't know. We did definitely get underneath this pink. So buyers do need to show up here if they're going to save it. But before this bar closed, it certainly looked like they were going to protect that level. If they give it up now, I don't know. That's unusual. Actually, to be honest, I really don't know how maybe that happens often. That might actually happen a lot. Because I wouldn't know, because when I look at it, it's a closed candle, right? And I guess I do notice where like the 5-minute chart tries to hold it and fails. And that's kind of what this would look like. Is like if you looked at the 3-minute, what it would look like is where they come down to the level and they tap it and then they get underneath like this. What usually happens? They get a dip and they rip higher. So if this bounced, gets a dip, guess what? It might not hold this time, but it's probably going higher. No one knows for sure. But my assumption is going to be up. I would have loved to get another chance at this, but I needed a better setup than just backing into a old resistance, new support. Like this would have given it to me had I paid attention to this. That would have given me that level. but I did not. Let's look at the other way to find a high is to measure the volume. Now, is the volume divergent? That's interesting. Okay. So from a volume perspective, oh yeah, it's down here at the VPOC. Duh. So from the volume perspective, we need to get price to, well, actually need to develop volume below this blue dashed line. It's not, from a volume perspective, it's not a reversal until there's volume under this. In other words, yellow line needs to get under there on bearish bars because it needs to get under it, and then we have to see bears get aggressive, not bulls get aggressive. But note that that VPOC was at the voodoo range level, and it shifted up as we pulled back. They responded by bouncing. They did not come back to test this. So this is potentially, what they're trying to say is that this is an impulse move. Does it look impulsive? And I honestly have to say it doesn't. It technically does have more volume than the previous one, right? It doesn't. This may fail. This is a divergent wave. If they can't go any higher right now, this might be done for the time being. I don't know if they're going to get under this, though. All they need to do is make another high, basically, and they're going to have enough volume to make this a impulse move. But a high of day with a divergent wave up is dangerous for buyers. If I would have bought those calls this morning, I'd be selling them now. So if you're this would seem like a pretty reasonable spot to start exiting longs because the potential is there. Now, if this stays divergent, the potential is there for it to not close at the high. I'm not going to say it's going to rug pull, but if they close this bearish, I should say, they haven't done it yet. If they close this bearish, it's probably time to pack it up and like wait for the next session, because it would suggest that the buyers are just finished for the time being. They can come right back again in Asia. But a divergent wave up at the highs like this is usually a sign of at least temporary exhaustion. And then hopefully a pullback, because that would be really healthy on the higher time frame, but we'll see. But you can see, had you shorted this orange bar, it actually did give me a pretty good entry right here. But if you do it, your stop is a high day, and the thing you're fighting is the fact that you only have 15 minutes left until the close, and you have 5 minutes until market on close is released. And when that MLC is released, if it's buy, they're gonna shoot it through the top for like in milliseconds. So you basically have like 4 to 5 minutes for this to roll down. How far do you think it's going to go in 4 to 5 minutes? I guess when it came up here, I think I had 5 minutes or 6 minutes. But yeah, what's my, like, risk reward might be better than 1-to-1, but what's the chances I actually hit this level within 4 minutes? I haven't seen any speed like that all afternoon. So I'm gonna guess low odds. If you want to gamble at MOC and hold through that and be okay with getting insta-stopped the moment that comes out, then the short looks technically on process. But I'm not going to play that game. Again, there are algos that are trained to trade the MOC release, the market on close release, and I have no edge against them as far as I can tell. But what we could see is one more push and then a significant drop. That could happen. But we don't have a lot of time to take advantage of that. So what they're probably going to do is dip it into MOC and then run it. But I don't know. Trend days usually end near the highs. And like I said, I will do a review when this is done. If there's not a lot of people in here, I might stop the recording and then restart it 10 minutes later. Uh, just so that those who want to, because that suggests that people are watching these more as a review on YouTube and not live, which is fine. Or that no one's watching them, but I know they get some views, so someone's watching them sometime. But I think it's easier if they're categorized as like live trading versus trade reviews, because some people are partial to one or the other, and I personally review the reviews myself. Okay, so they did get the close, whereas the trading sessions, sometimes I'll review them, but not always. So they did get the bearish close, and notice they got VPOC. Oh no, they didn't. VPOC is right at the 2-hour developing POC, so they need another bearish bar down here to even say that they are trying to push volume lower. Right now, volume is average, right? It's at the mean. It's where most of the volume was. So bears have done zero work from a volume perspective. Even though these two bars are bearish, they haven't shifted volume down at all. They haven't even attempted to do it. So all of these pullbacks have resulted in shifts up in volume. Price tests lower and then gets responsive buyers. That's a trend day. That means a higher time frame buyer is in the market, and in this area they have orders that haven't been filled yet, right? So if we had this algo on the higher time frame, what we'd see is a blue arrow on the day, right? Our day looks like this. It's not at the apex like that. It's like in the middle of a bar. But if we go to the higher time frame here, I might even be able to do it. Oh, I can't see it. That's fine. Hold on. Okay, so if I go this way, and look at a really high time frame like this, what I would guess, I guess not. Yep, it's got it on here. You know what? It might be such a high time frame that they don't trigger very often, but you can see on the big time frame, we got a volume shift followed by an aggressive buyer at the highs. They tried to gap down and just ripped right through them. That's all it's done. Just all squeeze. Oh, interesting. They got an aggressive seller in there. Oh, that was MLC. So MLC does go lower. This short does end up working. You can see in retrospect, this looks like a pretty easy short. But look how long it took to develop and how risky it would have been to hold through MLC. And potentially you wouldn't have hit your... I wouldn't have hit my take profit yet because it didn't hit till right here. And I would have risked letting go of the entire order for a full stop. So just if MLC would have gone the other direction. Now I would have had my risk off, so I'd be down to just runners. But still, I don't recommend just guessing the top. Even if you have the system, right? Like, it's not gonna work every time. So far, you got your risk off 50% of the time, but none of them really produced a huge drop. And that's normal because it's trend day up. That's just the way it works. The market is not fair at all. Many times, one side gets all the love and the other side just gets totally neglected and punished over and over and over again. Do not assume that just because bulls have had it good for a couple days, the bears will get their shot tomorrow or something. That's just not a thing. So you can see that that short is in danger, right? Because you would have gotten short here-ish. I would have liked to get on a pullback, I said. And you might have, now it might still work, right? You would have gotten your risk off here and you've been in runners, but notice that it did have to come back through the initial trigger here before having any chance of continuing. Now this orange bar is confirmation that it might actually work. I wish it wasn't the end of the day, because that is a good entry. This first one is a little bit risky, but when they come back and reject, like the likelihood this works is actually more than this. So this one got to that initial profit. This one probably will too. The one caveat is there's literally 6 minutes left in the day, and sometimes end of day is just, there's shenanigans. Like everything can look one way, and then just some big buyer or seller comes in and just fucks it all up, like a fucking elephant in the swimming pool. Like it's, yeah. But had I been in a position to take a trade at the end of the day, this after the MLC release is the trade to take. And then you take profits here after 2 bars, and you hold the runners with your stop up here somewhere. And then you just hold runners and see what they can give you. And you target down here at a 650. Now look, this is the POC, right? It's also right at the Voodoo range level. It's probably going to stay there for a while. It's comfortable there at that Voodoo range level. It also means that if they come up here and they reject, you can get another short. But there's a good chance that we're going to chop here. Good chance. So like being a seller there, can you be a buyer? You can be a buyer as long as this holds. So yeah. Yep. So you could sell this and buy this. And this technically did hit that area. So you need a signal to take it any further than just being a location trader, but let's see if they get a green bar here. I think they will. Oops. Will it be green? If it is, it's technically a buy. Again, it's probably risky because it's near a high day, but we did get a slight pullback. Not much of one, though. Oh, almost 50, almost 61.8. Almost. Technically 50. What about from here? Not 38.2 yet. I would prefer it, even when you pull it this far away, I'd prefer that we get at least to here. So this, like from here to this level, is really what I want. Yeah, because that's the real. Oh wait, hold on. Maybe further down. That wasn't the actual low. So really, oh, that's interesting. That's actually underneath this level. That's suspicious. So to get a 38% pullback, yeah, I guess that works. You could dip right under that. Okay. So I'd not buy that. And then, well, first of all, because it's the end of the day, but also because the pullback is just not severe enough. From this distance, I need 38.2, and from the most previous, the pullback most previous, I need 61.8. Oh wait, that's not it. This one. I need at least 61.8, which it did not produce. So somewhere in here is where I want my buy to be. If I was a buyer. But it's the last couple minutes of the day, so we're not going to be a buyer. market's about to close. Like I said, what I'm going to do is I'm going to end the session. I had a green day. It was a small green day. Nothing exciting. But, yeah, it made sense that it went up. I did not expect to ride the trend the whole way. I wish it would have been a little bit better. I had opportunities a couple times during the day to take more advantage, and I didn't. So I'm going to take a small break. I'm going to come back, and we're going to review the day. I'm going to see if I might be able to identify some of the spots where I can build some confidence in a trend day of where to buy the dips. And I also just want to review with you guys why we've been like what we looked at overnight to see that this trend was likely continuing to go higher for the time being, and where you might have known that. And then if you tried to short this, how the even though you would not have done very well, you can see. I want to show you how the system that we use, the trade and perform system we use, it would have like made it less painful, even if you thought that the highs were in. As expected, it does appear we're going to be closing near the high of the day. Sorry, guys. So yes, we did close near the high of the day once again, which is very normal during trend days. Overnight, this is going to depend on earnings and stuff like that, what happens next. So I'm going to take like a 15-minute break. I appreciate you guys, whoever stuck around for the whole video. If there's anything you want to learn about, let me know. You can always follow me at Red Ben Trader on Twitter. If you got questions about the algo, this is the Trade and Perform algo that Simon built, along with some of my own signals. So, and then I've changed some of the colors and stuff like that. So if you want to know more about that, you can email Simon. It's trade, the letter N, the word perform. So trade N perform at gmail.com, and tell Simon that you follow Ben and want to learn more about the algo. He'll give you a free week in the room. You can see his screen and hear about what we're doing. So if you guys are interested in that, we'd love to hear from you. We're really only looking to work with futures traders who are interested in getting more consistent and who want to trade a process. If you're just you're just interested in the excitement and just kind of enjoy like punting around, like if you enjoy that and you want to keep doing that, go ahead. But we're not going to be any help to you. If you actually want to learn a system and be consistent, you're welcome to join us, right? So I'll talk to you guys soon. Looks like there must have been some disappointing earnings. Hoping that tomorrow gives us some volatility. That'd be a lot of fun, maybe even tonight. But I will be back to do a review